In 1990, $1.3 billion vanished overnight. How did this happen? The reckless pursuits of a financial titan led not just to its own demise, but rippled through the economy, collapsing lives and futures along the way. The $1.3 billion in junk bonds painted a grim picture, an empire built on risk. The decision to aggressively pursue high-risk acquisitions sowed the seeds of catastrophe. For years, Drexel Burnham Lambert was a name that inspired trust. Now it was embattled in legal allegations. Lives were turned upside down as employees faced layoffs and families lost livelihoods. Warnings from market analysts went ignored as the appetite for risk overshadowed prudence. The core mistake? Underestimating the level of risk associated with these junk bonds. Trust in prestigious financial institutions like Drexel kept investors pouring money in. In 1989, the aggressive expansion into volatile markets marked the beginning of the end. Predictions of economic downturn began to emerge, yet the firm's leadership dismissed them. As the debts mounted, the first cracks began to show. What began as bold moves in finance turned fatal when ambition blinded investors. Decisions fueled by confidence turned reckless. Trust became the first casualty. For years, the high-risk strategies appeared successful, stacking wealth in short pockets. Yet, as earnings became unstable, initial comfort turned to unease among even the bravest of investors. By 1990, the situation escalated. Investors began to pull back. Liquidity tightened. The turning point came with federal investigations into RICO violations, casting a dark shadow over Drexel. Failure was rapid and unforgiving. Drexel declared bankruptcy, shocking the nation. The aftermath left countless employees without jobs and many investors in dire straits. The resonance of Drexel's collapse echoed through the financial world, prompting stricter regulations. The collapse served as a sobering lesson. Unchecked ambition could dismantle an empire and disrupt lives. The ensuing regulations brought the Federal Reserve and the SEC to the foreground, implementing new oversight measures and changing the power dynamics within Wall Street. Accountability became paramount, built on the bones of a shattered institution. This story is a warning. Trust, when misplaced, can lead to catastrophic loss. The lessons learned from this financial disaster remind us of the delicate balance between ambition and accountability, one that stakeholders must never forget.